we'll give it a few minutes. Hey, Hannah. Shashank, what are you doing here? Good to see you. Hey, Joy, Karim, thanks for joining. Hey, Amant. All right, let's get started. Faris, welcome to the Let's Talk Crypto webinar.
Happy to be here.
Sweet. So my name is Mark Shahawan. I'm the co-founder and CEO of Sarwa. And today we just announced Sarwa Crypto, our latest big announcement and addition to our Sarwa app, designed by our very own Faris. And in addition to being and leading our product design, Faris has been investing in crypto for how long?
10 years now, I think.
Almost.
Yeah, like between 8 to 10 years. I haven't done the math in my head. 2013, so 9 years.
Yeah, awesome. So usually I can handle these webinars alone, but I wouldn't come unaccompanied by Faris on such a big topic. So we're really excited about this release, and we felt like it's only appropriate that we start to break it down a bit further, simplify it. And I'll be asking Faris a few questions and then opening up for Q&A. But before that, let us just tell you a bit about the release that we just announced a few hours ago. So few disclosures, however, as usual, we don't try to predict the market in these sessions. We don't believe anyone can really predict how things are going to go down. So if you're expecting that out of the session, you won't find it. Even the second part is that our views are not to be interpreted as one-on-one financial advice. So we try to speak as broadly as possible, as simply as possible, but it might not be relevant to your exact specific situation, as we don't know what your goals are. For that, we leave it for Sarwa customers where you can get in touch. And finally, an additional disclosure is that crypto is more volatile than stocks and ETFs, which is what we were known for in the GCC. So unlike stocks and ETFs, they behave in a riskier manner and involve more risk in general. So we're going to be discussing that in a bit. But for those that are in crypto or have been in crypto, it requires a bigger heart to withstand some of the volatility that we're experiencing even today. What is Sarwa Crypto? It's the easiest and safest way to buy and sell and hold crypto with zero commission. And it's our latest one, with the goal of making Sarwa your one-stop shop, where you don't need to have 5 different apps to have your investments into stocks, your investment into ETFs, and then a different app, your investment into crypto. You can now do all of it in one place. And we're starting with 4. So yeah, this will be available through the existing Sarwa Trade app. So all of it in one app. And we're starting with 4 coins. So Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. And yeah, so that's it. You can check out our website as well. That will have more information on it. And with that, I'd like to start, Faris, maybe if you can just describe your journey across the last 9 years or so, how it started and some of the highlights along the way.
Sure. So it's really interesting. When Bitcoin first came about, it was predominantly used for, there was a website around, I think it was called the Silk Road. Yeah, Silk Road. And it was predominantly used for illegal and illicit kind of goods and services. So at the time, actually, one of my friends, he mentioned to me, buy some Bitcoin, like buy $100. I didn't listen. I kind of was like, oh, it's, I don't want to get in trouble. I don't want it. And so that's how the space kind of started. But before that, Bitcoin from its inception was created in a response to the 2008 financial crisis. Like if you look at the first block in Bitcoin, it contains basically a hash of the link to the article from, I believe, the Times, where it was, the US basically doing a $500 billion bailout for the banks back then. So, okay, so with that, it was created in response, but in the beginning, it was predominantly kind of in its discovery phase, and people who flock to it in the discovery phase are usually people who are more willing to take risks and whatnot, not good risks in that case. And so at that point, I wasn't really more so kind of involved in crypto. I started to become more involved around late 2012, early 2013. And around that time, Bitcoin started to get a little bit more momentum. And it was very fascinating to watch. Also, around the same time, we saw the emergence of like similar coins like Litecoin, which was or is essentially a virtual copy of Bitcoin, but essentially with more token supply and a little bit different mechanics overall, but it's more or less just a fork of Bitcoin. And so we started to see, things like that kind of evolve as Bitcoin kind of grew. And then we started to see the rise of things like Dogecoin, which I was fortunate to be a part of back in the beginning, to kind of watch Dogecoin go from literally a joke, which we kind of, as a community kind of try to champion and push various different things, like getting the Jamaican bobsled team to the Olympics, which is very cool. But at the time, it was like, honestly, it was more so kind of mocking the space more than anything else. But as people tend to spend more time in this space, they tend to get greater understanding as to what crypto actually is. It's not, so people tend to overfixate on the monetary aspect, which is very, very cool and interesting and whatnot. But the technology has evolved so much over these past 9 years that crypto today is nothing like crypto then. Back then, there were no easy ways to, make trades on exchanges and whatnot. Like the first kind of major Bitcoin exchange, Mt. Gox, back in the day, had a huge hack and breach, and a lot of Bitcoins were stolen at the time and caused a massive crash back then. And so now there's a lot more safer means to kind of invest, and there's a lot more, I wouldn't say complete regulatory certainty, but a lot more clarity than there was back then. Back then it was a lot more like the Wild West. But with that, we're seeing kind of the rise of like smart contracts and decentralized apps and DeFi and NFTs and whatnot. So we're seeing use cases kind of grow beyond what was the initial use case of Bitcoin, which was basically an alternate form to store your value against the dollar back in the day. So yeah, crypto has been through a lot, through the great ICO boom in 2017 to all the different waves that have come between then. But the one thing that's becoming clearer and clearer is that it's not going away. Some projects, or most projects, do end up going through a sad fate at the end, like a lot of companies. But ultimately, the technology, it's basically proven and stood the test of time against various different like global issues, local issues, industry issues. So I don't really see that stopping. I kind of see that continuously growing, because in itself, it's a very liberating way to kind of host your assets with something essentially that is not controlled by any central body. So it's not subject to, we see, inflation on the rise in the US and how the Fed is trying to respond to it and how it's affecting things globally. So these kinds of intricacies, while yes, some assets and whatnot take hits, ultimately, long-term, you look at all the governments, they're all looking towards kind of implementing their own versions of these digital assets. So it's really, really interesting to watch, going from essentially response and drug dealing and things like that, all the way now to we have governments that are sitting there and talking now about, we want to implement our own versions of this, because it's a better alternative essentially to money. So long spiel, but
No, I mean, you're covering a lot of ground, so I can appreciate that. And in terms of today, has anything changed? You were indicating about, you were telling me a bit about your outlook just before we started the webinar. Given the last few weeks, has anything really changed, or are we just dealing with emotions and a certain fear about people that got into it maybe for the wrong reason?
So we're seeing kind of twofold thing. We're seeing right now people are obviously selling out of fear in a lot of cases, because it's people panic when the Fed raises the interest rate. Everyone wants to go and move all their assets into cash and go risk off. However, at the same time, these these periods have happened time and time again throughout crypto. If you haven't been through like multiple 70% crashes at this point, you haven't really been in crypto, because it's par for the course. Like you essentially get these buildups of a lot of hype and delusion on a bunch of different assets or focuses, and you get your little bubbles. But ultimately, the assets always regress, but long term, it's always on its trajectory up, because you're gaining more adoption, you're gaining more usage. Not just Bitcoin, we're talking about things like Ethereum. You have so many decentralized apps and so much value locked up in these DeFi apps, and that's pretty much just the beginning. There's smart insurance things coming, there's enterprise adoption on its way, there's government, so there's a lot going on. And so while yes, maybe short term, it obviously could be possible that the market will, and no one knows for sure what would happen in the future, but could the market not really do much, or could it stagnate or something? Possibly. But as long-term investors, you kind of just sit back and say, whatever the market's going to do, it's going to do. As long as nothing has fundamentally changed with the core assets themselves and the market and the adoption, it's more or less just noise. So people tend to overly react to their emotions, and that's what we see in these capitulation events like 2 weeks ago. And the Corona dump is a great example. Assets dropped like 50% in one day. I'd never seen anything like that before. People were screaming from the rooftops, doom and gloom, everything's over, get out of every asset while you can. We watched the stock market kind of go through a similar fate during that time. But you look back and you're kind of like, mass hysteria can only lead to so much. And at that point, it's like, okay, the people who really believe in the underlying technologies and understand essentially what generates this value and what's creating this value, they're the people that I know right now that are sitting on the side, dollar cost averaging. They're buying all the different cryptos they can, that they find fascinating and interesting. But it's definitely very hard to time this market. It's basically, in these kinds of events, it's like catching a falling knife. But more often than not, and I don't want to say always, but more often than not, when you do buy a blue chip crypto asset, one that's kind of survived through at least a cycle or two, those tend to always keep on their trajectory even after the crashes. But yeah.
Well, on that, actually, I was listening to a podcast with the ex-CTO of Coinbase, Balaji, who was very much prompted not to give financial advice, but in his own, if you were to start today, he was mentioning a 50-50 split between Bitcoin and Ethereum. Is that something that you would, is that what you meant in terms of blue chip, or as a starting point to get exposure in crypto?
Yeah, what I would say is so the blue chip assets are not necessarily the assets that will explode the most in growth, because they've been more or less discovered already, in a way by the market. But that doesn't necessarily mean they won't have major growth to years. So it's for especially for new people kind of entering the space, or people who aren't too aware. Definitely Bitcoin, Ethereum, and a few other kind of blue chip cryptos usually are the best bet. However, when making crypto buys, you kind of have to just come to the you know, acceptance of like, you'll never get the price 100% correct, like in terms of, you know, the deal. You just got to make the buys and kind of just, you know, withstand it, I guess is the best way of putting it. Because, you know, basically the space kind of, in 2017, we got a lot of hysteria and hype around, you know, all the various different ICOs, and a lot of those ICOs are dead today, like those companies that, you know, held those ICOs and whatnot. And it's, to be honest, because of the fact that they wanted to do things that were not necessarily technically accomplishable at the time. I worked at a decentralized credit company based in San Francisco for like 3 years, and we faced various different, you know, technical challenges, you know, just because the infrastructure that exists today didn't exist then. But also, you know, just the overall sentiment and approachability to things like crypto assets. No one wanted to hear about crypto in 2018. You walked up to them, they just turned around and be like, oh, I don't know what to talk about this stuff.
It left a sour taste after, I guess, 2017, where it went up and went down. Yeah.
And I know so many people, for what it's worth, who sold very close to the bottom of the 2018 because they thought that's it, you know, it's dying, it's going. And they're sitting in a little bit of regret now because they wish that they didn't sell those assets and they kind of just held on to them. Which is why I always say, don't let your emotions kind of drive your financial decisions. But yeah, the space now is incredibly exciting because we're seeing a lot of major fintechs right now just entering in and major funds being created to deploy capital and cash into these. I want to be clear, back in 2017, if you went to a VC and you were saying, I want to go do or launch a Web3 or crypto-based thing, because I can tell you, I did that. I pitched the protocol I wanted to do at the time. And everyone was just kind of like, oh, these crypto, what, we're going to get tokens and this and that. And now you're seeing a different kind of, you know, view on these assets on the whole in these funds, and funds being created just to focus on these things. Like Anderson.
Yeah, last week you had a 4.5 billion announcement as a fund from A16Z into like crypto, specifically focused on crypto. So while there's a lot of talk of a downturn,
Yeah.
a lot of the longer term investors are using this as an opportunity. And
as well as long-term like crypto fintech companies like Robinhood and Coinbase, and they're really trying to embrace, like Coinbase started as a crypto company, but they're doubling down on a lot of, you know, their crypto offerings. Likewise with Gemini and Sarwa, and you know, like we're seeing a lot of this embracement of these assets, and it's really cool to see.
Yeah, of course. And I imagine between your group of like friends and family, I would imagine you're the crypto guy by now, or
more or less, yeah.
And what would you share like at like at dinner or when you're having coffee as some of the like lessons learned or common mistakes other than the one we've been discussing?
Researching projects thoroughly. And what I mean by that is not just throwing up a YouTube video and seeing what some crypto influencer is talking about, or going to crypto Twitter and just relying on what specific tweets are, because in crypto, you do have a lot of hive minds and what's it called? Like mob mentality, I guess is the best way of putting it. So like if you go against the mob, you point out a flaw in a particular thing, they don't like it, even if it's, you know, so it's basically to avoid getting into that mindset, because these protocols are not all built equally. They have human people behind them that are designing and implementing, and so I guess just, you know, be cautious with what you're putting your money into, and if you really do believe in a specific thing, make sure you read it thoroughly, because I can't count the amount of times I've seen people buy assets. Like, you know, we had the Luna debacle 2 weeks ago, and it was just essentially, it boils down to they had essentially a bank run, and they were a stablecoin currency protocol, whatever. and their stablecoin was backed by crypto assets like Bitcoin in a reserve, but Bitcoin is a volatile asset, so that's not really the greatest. But anyways, so they essentially had a bank run event where people were taking their Luna token and converting it for USTs, and because basically when you burn your Luna token, it mints new UST stablecoins, and when you burn your UST stablecoins, it mints a Luna in return and whatnot. But we were getting over demand to the one side because it was like a programmatic stablecoin, and so as a result, we witnessed probably what was one of the greatest crashes in all of crypto, which is an asset going from $120 in April. Actually, I'll even do it between the 3 days. It was at like $90 or something the first day, and then 3 days later, it was trading at 1/100th of a cent or something. So in these kinds of events, it can be very catastrophic. So I've seen a lot of people lose their money because they didn't read. They just bought into the hype. They bought into the, oh, but these guys put money into this or this, but at the end of the day, I want to be clear, crypto is not dangerous. Crypto is very, very powerful, but just like any space, you got to do your research on whatever it is you want to invest in, not throw money blindly at, whatever the biggest hype and trends are, because just throughout the 9 years, those tokens just don't stand the test of time. They just end up dying, sadly.
And what happens when I saw that they're trying to do now like a Terra 2? Have you seen projects get revived, or is that a lost cause, or there have been successful relaunches and revival of such fails?
Yeah. I don't want to say it never works, because it does work sometimes. Like a great case is, it's not really after they fail. Like some brands, like for example, one notable company in decentralized finance called Aave started off as ETHLend, and most people don't even know that, because they've entered the space now and this kind of, but or just like even the DAI had its own kind of event back in the day. Now the DAI is looked at as a very, very, because they back it now with USDC and a variety of different other stable assets to kind of keep it. But yeah, no, it's ultimately really, really, it's fascinating to see these things, because in the case of Luna, honestly, I don't really see a revival, because the most important thing in crypto is trust, because you're not dealing with a business necessarily, you're dealing with a protocol. So if you've essentially destroyed that trust with your community, it's incredibly hard to build back. That being said, nothing's impossible. It's just incredibly unlikely for things like that. We don't, Mt. Gox, for example, is not around today, as well as a variety of different exchanges that faced major hacks over the years. They're not around anymore to live to tell the tale, except for Bitfinex, I guess. But yeah, so honestly, I think it's I'm more interested about the assets that are less they've already failed and they're trying to do a resurgence, and ones that are just focused on trying to build stuff organically towards towards a long-term vision that actually makes sense. Another thing in crypto is that you get a lot of projects that promise really great sounding ideas, really cool future thinking, whatever, but they're not very practical, especially from an adoption point of view, because Web 2 still exists. Most of the world does stuff on Web 2. So you kind of do need a transitionary phase and period to get people from one medium to another. And even then, in the future, I presume a lot of people won't even be aware that they're utilizing crypto assets, just like the same way people aren't aware what TCP/IP is when they're using their computers, like most people. So it's in that regard, it's really, really, really cool.
For those unfamiliar with the terminology, what's your way of clarifying Web 2 compared to Web 3?
Sure. So Web 2 is Web 3 is a marketing term, to be honest with you. But pretty much it's attributed to any companies that are utilizing, I mean, I know some companies aren't utilizing decentralized assets, but for the most part, let's call it, the decentralized ecosystem. Whereas traditionally, businesses like Uber is a great example. They're centralized to their, they have their own servers, or they host them maybe with some, but it doesn't matter. They're centralized as an organization. They have, a team basically responsible for everything that happens day in, day out to Uber. But you could hypothetically, in a few years, when the pieces that are being built fall into place, you'll be able to build a version of Uber where you don't even have the Uber overhead. You just have Uber facilitating the riders and the drivers directly, so that riders pay less and the drivers earn more. So it's a win-win for both sides, because you don't have the overhead, you don't have the, it becomes more of like a common good than it does become like a profitable business entity, because it's like you have like a technology that's facilitating the trust.
You remove the
Historically, we've always
middleman in a lot of
middlemen.
ways.
Yeah. Yeah.
Got it. Very cool. And I guess we mentioned a few use cases. If we talk to the crypto believers, we mentioned, what are they really like? If I buy crypto, what are some of the things I'm kind of betting on to play out? We've discussed store of value, we discussed decentralization. What does it look like on a non-financial level? What are some of the biggest themes that I would be supporting or hoping would happen and have upside if they do pan out?
Yeah, so number one, smart contract development and adoption. Seeing more of these smart contracts and cool things, being made. Obviously, we want to see more of that. Also, so something that's interesting that's happened in crypto, it's been happening for a long time, but it's picked up a lot of interest over the past few years, is the race of the layer ones. And what does a layer one mean? It means basically like Ethereum is a protocol that allows you to build smart contract apps on top of it. There are now alternate ones like Solana, Avalanche, Polygon, and a few others that allow you to kind of do the same thing. But now we're reaching a problem where it's like, you have all these different various blockchains. Well, how do they communicate with each other? Well, there's some really cool technologies coming out, like cross-chain interoperability. And basically it would be what the internet was for the intranet. So like having all the different various localized computer clusters, this is what unites them all, and becomes very interesting, because then you can leverage blockchains for their benefits for specific use cases where you need to. And you can kind of manage assets cross-chain from your single smart contracts having. So that's something, like, these don't sound really like exciting from like a consumer perspective, because it's basically a lot of these building blocks that haven't been there are finally coming into place. Things like decentralized Oracle networks are super important too, as we kind of move towards a more trustless way of doing essentially technology. Like staking has become very big, even though it's form of staking, some implementations of it, like in the case of the Luna debacle, they were handing out 20% APY for holding your UST in a protocol called Anchor. And it's not very sustainable when everyone's just getting 20%. So it's like, while we get excited, I guess, to answer your question, we get excited to see all these different developments. At the same time, with those developments, you get opportunists that capitalize on it and essentially don't really think about the long-term ramifications of whatever they're doing. And so what we end up seeing in crypto is we get these years, which are called like the crypto winter years, which is like where all the quiet development and all the building blocks and stuff come into place. And then as those pieces start to come into place, everyone starts to kind of take notice, and then they start to rush in to try and buy the different assets. And that's how you start to get your bubbles. But it's like crypto just goes through these waves. And I think the next wave will be, cross-chain interoperability and like proper meaningful adoption, because we're getting there. Like there's I've seen so many talks in the past 2-3 weeks, or from conferences from major tech companies here in the US as well, that they're all embracing it. They're all figuring out digital wallets and how do we figure out how to, why would they want to do this if they didn't really think this is going to become a core aspect of how everyone will not only transact, but manage their digital identity, you know, because that's something else that's a very hot topic, is managing, you know, who you are in such a trustless kind of ecosystem.
Yeah, I know. Today, even actually, Majd Al-Futtaim, for those in the UAE, or MAF, just announced that they're going to work on accepting crypto payments, and they're one of the biggest. They own all the, like, a lot of the malls, the stores. So, and the National came out with news on where 1 in 3 UAE residents owns crypto. So I think in terms of adoption, that's even higher than where we're seeing it elsewhere. Maybe because we don't have winter. People are more bullish, but I guess one last question for me before we start answering some of the questions. I want to touch on security, and specifically around Sarwa, to use it as a use case. Can you tell me a bit more about, you know, on the stock side, we have you know, you have Sarwa's role, but we also ultimately, if you trace it back, you have Citibank as a custodian, and they play a big role in storing and safeguarding the assets. How does that look like on Sarwa Crypto, as it's a different system?
So with Sarwa Crypto, if you essentially trace it back, Sarwa's assets are actually managed by one of the fastest growing, most popular, honestly, one of the most well-respected exchanges in the US and kind of globally, FTX. So as far as security concerns go, they already do a fantastic job with respect to isolating assets from, they don't just leave everything live, hot, available. Like, what I mean by hot means like literally you can trade it and you can withdraw it in, like, you know, an instant. They do a lot of managing where they move assets away so that in the event of some kind of a breach, the assets are siloed into different. So as far as security is concerned, Sarwa has a very, very strong security proposition. If, you know, people also believe, you know, in FTX's security and whatnot, which I wouldn't see any reason why not. That being said, obviously, as the years go by, like I've seen, you know, custody evolve and change from its inception to today, and I'm sure how we handle custody may or may not, you know, ultimately change in the future. But I think as far as, you know, how we do it, I think it's like wonderful. Makes it easy, makes it you know, painless. You don't have to sit there and worry about private keys and you know. I can tell you, you know, I lived, my friends, they've lost some of their keys and they haven't been able to access their, like, they bought crypto 8 years ago. They still to this day can access some of those assets. So for the
when they have tried to become their own custodian, and when you hear don't leave your money on the exchanges, that's kind of the hot storage that you're referring to, where it's not being stored in various areas after Intucles. Got it.
Yeah, like, I mean, the general sentiment of crypto is always not your keys, not your wallet. That being said, you know, while I do host some of my assets in an offline wallet, I do have a large amount in exchanges, because notable, trustworthy exchanges, because there's so many scam exchanges, which I obviously would say, you know, steer clear of, which is why it's really great that Sarwa relies on FTX, because FTX is not. FTX is up there with Coinbase and Gemini, essentially, in terms of, you know, seriousness. You know, they're also a very small team, which has made them very, very adaptable to kind of rolling out new tech. They move fast on everything, which is yeah.
A characteristic of small teams.
With FTX. Yeah.
Awesome. Cool. Thanks, Faris. We'll just answer a few questions that we're getting from the audience, and please feel free to add to it if we missed anything. The first one is from Suraj. So can we have a separate portfolio for stocks, ETFs, jet trade, and crypto? Yeah, so it's all under one app basically, where I'll give an example of how I do it. So for Sarwa Invest, this is where you'll have, um, if you're a long-term investor, the majority of your wealth there, that's very diversified into a portfolio across many stocks, up to 10,000 across the globe, heavily into US stocks, but that's where this lies. Sarwa Trade, this is where you'll be able to do more of your speculative bets, whether it's on crypto or trade. So it is, and it is a different tab to basically differentiate between the different approaches, where one is much more long term, less volatile. The other one is much more volatile. But all of it is within the same app. You have the benefit, Suraj, if you want to open multiple accounts. That's something you can reach out to us. Even within Sarwa Trade, you can have multiple accounts within Sarwa Trade in case you want to name them differently. That's an ability you have that you can do within the app to name your account. So let's say one is for your children's education, one is for maybe a down payment, one is just for the sake of making money. It's completely up to you. We've seen so many different names. Now, so yeah, hopefully that gives you an idea and on how each one sits. But in terms of allocation, I've seen people say, I'm not touching crypto, to 5% seems enough. In general, the wealth management industry will gravitate around 3 to 5%, but it's heavily dependent on your age and your risk factor. Someone in crypto will look at 60% and say, oh, that makes sense. They're lucky to even have, yeah, exactly.
I'm sitting at like what, like 90%, you know?
Exactly. So it becomes very personal to your risk appetite. Ultimately, we're not, if you want us to advise you, we'll look at your situation, but if you want to be in complete control, this is going to be up to you to decide what is your allocation, and it might shift as well. We've seen some clients where, especially when, Faraz was mentioning March 2020 and the COVID volatility, the last resort is someone selling and withdrawing. One thing we did instead is encouraging them to turn the heat down and maybe go into something more conservative, where you rebalance your portfolio, you change it, and you change your allocation so that you take on less risky assets. If that's something that's a much better outcome than panicking and liquidating.
I just want to add one thing to that. Basically as well, if you look at the trajectory of a lot of these crypto assets and whatnot, if you see that, while yes, they crash, 50-70% every now and then, you go take a step back and you look at, well, where was it, 2-3 years ago? It's multiples higher than where it was, where it, crashed to, not even where it ended up, at its all-time high. So like keeping perspective as well can be key sometimes in crypto, I feel.
Mm-hmm. Another question we got from Shashank: do you think customers are trying to view Bitcoin as a store of value, i.e. asset like gold, whereas companies, eBay, PayPal, Square, are viewing it more as a medium of exchange?
It's a great question. So this is an argument as old as time. Some people really believe Bitcoin should be a currency. And I mean some, Bitcoin maximalists believe that, as well as you have some Bitcoin maximalists that believe the opposite. They believe Bitcoin should be the ultimate store of value. We actually saw as well, Tesla went from, they accepted Bitcoin purchases for cars and whatnot, to then they said all of a sudden, no, we're gonna halt it temporarily. While Tesla was simultaneously accumulating their own stockpile of Bitcoin. So I think it's really hard to look at these companies and say they're looking at it as a means of, while to the user, it might seem like they're using it from a means of transacting, they're not, what they're doing isn't taking that crypto and liquidating it immediately. In a lot of cases, they're taking that crypto and putting it into like their reserves, separate from like their actual cash revenue, which is really fascinating to see and witness. Because I never thought there'd be a day that would actually be the case, back in the day. And so with Square and, honestly, so many different businesses kind of gearing up for this, and a lot of different fintechs globally kind of enabling further infrastructure. I just see it becoming, I see people using it for, in certain cases, for the purpose of currency, but I think predominantly over time, it will become more of a store of value just because it doesn't really work well as a currency. You have to pay so much in fees at the moment. And it's not very fast because it's the first blockchain. It's like the first grand example of something as awesome as that. So to answer your question, I think it's just it's a question of perception right now, and I think it's just going to over time gradually just become more the gold mindset.
But my question also, or like issue rather, is if for someone that doesn't own a lot of Bitcoin, so already, like, let's say one is around that 30K mark as of May 31st, just for a timestamp. Like, you might not want to use it as a payment and miss out on the upside. So what is, and I know, like, I saw, like, maybe, I don't know how true these stories are, but people buying pizza with Bitcoin and
That's true,
and missing out on so much. So doesn't that also play against it becoming a payment?
yeah. I mean 100%. Like, I'll tell you, like, I've been in crypto now for 9 years. I have yet to actually, I am more willing to spend my own cash than I am willing to liquidate my own crypto assets.
Yeah.
Because, and my family knows this, my friends know this, my coworkers know this, that, like, basically when it comes down to, crypto, there's nowhere else I would want my money to be parked, even with all this crazy volatility, even with all the global macroeconomic stuff going on. Because actually something to quickly add, this is a side tangent, but not really. As we see these, global macroeconomic conditions kind of further evolve, we're going to see businesses start to look towards creating greater efficiencies. And to be honest with you, one of the first places they're probably going to look is blockchain and crypto, because you can make a lot of bits and pieces of your business essentially redundant and cost effective by utilizing these things. So the reason why I mention all that is going back to, well, how those technologies evolve also impact how Bitcoin is viewed. Like, Bitcoin was viewed more like a currency when nothing else existed. But now we're seeing, like, my question to people would be, why transact in Bitcoin when you could transact in a stable coin? It's virtually the same, but you're essentially in that case, doing the same thing that we are today, but still living within the crypto ecosystem. Not to say go buy a bunch of stable coins, because stable coins, by the name, they're stable. They're not going anywhere. They're not going up or going down. In the case of Luna, not the case, but yeah. So I think to answer your question, I think, it's just a product of where we are right now in the market and where we are, in the overall life cycle. Like, Bitcoin's only been around for 14 years, and look how much noise it's already made. It's kind of wild. So I think over time it'll become more of a store of value. It's just right now you still have people who want to, like, in Salvador, they wanted to basically, or they are, buying a bunch of Bitcoin, and I believe it's Salvador, buying a bunch of Bitcoin and giving it to people to go and, like, transact and buy and make payments with Bitcoin. So they're using it for the payment mechanism, but a lot of the crypto community at the time was questioning feasibility of it, if that makes sense. So it's like, there are people for it and there's people against it. So I wouldn't, like, there's no one single answer to this at the moment, but my personal belief is that it will go towards proof of value over time, because there's just better things to do transactions on. Like better currencies.
Got it. Thanks, Faris. A question from Hari Rani: how safe is cryptocurrency? It's hopefully through some of the stories and data points It's a great question because safety is on so many different levels. Are we talking about custody? Are we talking about from an investment perspective, how volatile it is? If you're looking at safety from the point of view of volatility, safety and crypto don't really go together. You're much better off in there's a much better tools to do that, right? But in some sense, I find there is a safety uh, point to crypto because ultimately there's a bet against that if things go there's a safety from not relying on a system. There's a safety in operating on in a decentralized way where your outcome isn't decided necessarily by one party, or whether it's your government or the US government. So not sure if that's how you approach that, but definitely, and that's why we started the session around volatility, and from an investment perspective, which we focus on a lot, not the not the place to look for safety, and if that's what you're after.
Yeah, I agree. Like if you have to have some level of tolerance for I mean, what I tell most people, when especially new people who know nothing about crypto, going into crypto the first time, make your buys and honestly forget about it, not for like 6 months, forget about it for a few years. Because the people I find that sit there and constantly check, they're not suitable for like, I mean, I check every day, but I don't personally get affected emotionally by the different, swings and stuff. But if you are a person that does get affected, then I would probably not advise you to buy crypto, because the last thing you want to do is basically panic sell, because you're scared of where everything's going, or like based on that given week or given day, or because a lot of stuff happens in crypto week to week and day to day, that you got to basically always be prepared for the worst, because a minus 5% in crypto in a day, that's a regular day. A minus 10%, it's a little, minus 20% events are pretty, but like in terms of in a day or a week, or but yeah, like I personally, like I said to you many times before, I've lived through countless 70, 80, 90% corrections over the past 9 years, that you kind of just learn to become desensitized to it all if you just take a step back and think big picture. So I guess it really depends on what your time frame is, for what your goals are, for where you want. Now, if you're a long-term investor, you buy it and forget about it. If not, maybe crypto isn't for you, because the emotions can really mess with people.
Mm-hmm. Awesome. Another question from Harry is, can you explain how blockchain has impacted the fintech industry?
It's
Maybe,
changed.
yeah.
Completely changed it. What we're seeing is basically banks for a very long time were the like one industry that really no one could penetrate or touch or influence or change. And that's not just over there. That's globally is the case. You go Europe, you go US, because banks are typically extremely conservative, slow to move, slow whatever, and they have the regulations that basically favor them most of the time. So in the case of fintechs and how blockchain has kind of evolved and changed it's done a lot with respect to, now it's forcing banks to have to compete with a like a boogeyman kind of that's coming, that they can't really shut down or fight, because it's a decentralized system in most cases. They can choose to not embrace it, but we saw that in 2017 when banks were preventing people from making crypto purchases in the US. Some banks were blocking them outright when you try and make a purchase. Obviously, that didn't work. It didn't change anything. Crypto's multiples higher than it was, years ago. So that's on the price side, but yeah, on the tech side, you're having even more recent fintechs, in the not even recent, like let's say, fintechs that were created 10 years ago, like Venmo and like, PayPal and they not only sat there and said, well, crypto is a potential threat to us. They sat there and said, we need to embrace crypto. We need to bring these payments into our ecosystem. Otherwise, we're missing out on this big wave of adoption, because it's borderless payments and borderless value transfer and borderless, just in an overly simplified sense. You're not subject to the 5-day waiting or transfer times that you have to do when, sending a transfer and it's going over the weekend and getting stuck and the bank did this or that. It's the protocol just validates it and it's there within minutes. So these kinds of things are ultimately changing how a lot of these businesses are approaching it. Now, that being said, I didn't even mention anything about decentralized apps and smart contracts. And you have so many fintechs sitting there building really creative and cool concepts, utilizing the Ethereum blockchain and other blockchains like Solana and Avalanche. And that it's like, there's so many things to talk about here, and I can't understate essentially how much impact it's having right now. Basically, like, it would not surprise me if a day comes in the near future where you're going to take out a loan from a bank and they ask you for proof of your crypto assets as collateral, like you just walk into your bank. That day is not far off. Now, I dreamt of that day 5 years ago. And I thought like, oh, it's going to be like, I'm going to be like 50, 60 years old by the time that, like that mentality comes around. It's changing because they want this information. It's basically just unlocking financial freedom, in a nutshell. So yeah, I think every fintech will be affected in its own right, and will want to kind of be involved in this ecosystem in its own way. But yeah, it's always exciting to see how much it's evolved.
Yeah, I bet. I know you got your parents into it as well, but that's for another story. For another time. A question from Harish, you're asking about investor protection for cryptos that are held at the exchange in case the exchange gets liquidated, or so. I think we answered this one earlier, but the main point here is that the custody is with FTX, who does their own efforts and follows the best practices to not to leave the currencies on the exchange itself, but to do cold storage in their own way, so that it's basically diversified across many areas rather than in one place where you have all the coins that are accessible. Hopefully I didn't butcher your answer, Faris, but that's the point here. Unlike stocks, or for example, where you might have SIPC insurance that's more popular in stocks, I haven't seen that carry over to crypto just yet, where the government steps in. But as Faris was saying, as it becomes more institutionalized, these are protections that maybe aren't too far off, and we're going to see different waves of custody. As Faris was saying, it's something that's evolving to make it more secure as well.
It really wouldn't surprise me if we start to see a bunch of like decentralized insurance protocols come about that are just based around this, providing insurance to your underlying assets. I know there are some like actual staking services that provide stuff, like Banker is one that like gives you like, I don't know if they changed it recently, but if you held your asset in them for 30 days, each day you hold it, the protocol itself gives you some coverage of insurance. So in the event of something happening, you will get all of your stuff back. I butchered that explanation as well, but basically, I think this whole debate and stuff is something that a lot of companies are thinking about right now, because there's a big opportunity coming for this stuff.
Yeah. Awesome. And we had one last question around, is staking possible in the Sarwa app? And then not yet, but thanks for indicating your interest. And definitely the way we like to do our product roadmap is in general, just to hear what people are interested in. So we'll keep that in mind as it evolves. And if there aren't any questions, we can wrap it up. Thanks everyone for joining and the engagement. and definitely take some time to check out the Sarwa crypto app and let us know what you think.
Thank you, everyone.
Thank you, Faris. Thanks, everyone. Bye-bye.